Hi everyone, this is Aditya Mehta. Welcome back. So today I'm gonna be helping you understand how we can make risk-free money from the stock market. It is called something on the lines of share buyback arbitrage. A share buyback arbitrage is basically a special kind of a situation wherein you can buy the shares from the market and sell it back to the company with almost no risk at all. So let's get started, and I'll help you understand how you can do this every month to make around 5 to 15% of profit. And this is already happening in the Indian share market. So please feel free to use this strategy to enhance your portfolio returns. Okay, so before we get started, quickly I'm going to tell you to like, subscribe, and become a free member on the equityland.com website, so we can stay in touch with you and bring you more and more strategies to make money. Okay, so those of you who do not know what is a share buyback. Share buyback basically means when a company announces a share buyback, it basically means that the company is going to buy back its own shares from the retail investors or the investors in the stock market to increase the value of the share. Okay, so when it has extra money or extra cash, it decides to buy it back from the investors, thereby increasing the returns of the investors. An arbitrage opportunity. What is an arbitrage? Arbitrage is risk-free opportunity wherein you buy the shares from the market and sell it back to the company. So how does this work? And why is everyone not doing it? That's the question you would ask. So let me make you understand this. And this is how professional traders are currently doing this in the market, and even you can do it. But there is a limit to how much money you can make. So we'll just get into it. Right. So first thing you need to understand about buybacks is, so when a company announces that it's going to buy back its own shares, it will announce that it will announce the amount of money it's going to use to buy back those shares. For example, a company like Infosys, this is just an example, might announce it will buy back shares worth 13,000 crores, right? Now realize, just notice that it will announce the amount, say amount is 13,000 crores. There is a SEBI rule, right? If you see the first point, there is a SEBI rule that 15% of the amount, so in the case of 13,000 crores, around 1,800 crores, has to be reserved for retail shareholders. Retail shareholders are small shareholders who have shares worth below 2 lakh rupees. Total value of the shares in their account, in their demat account, is below 2 lakh rupees. So remember this. So if you are making a trade, remember that the total value of the share buyback plan is below 15% of it is reserved, and you can do a trade only when you buy shares below 2 lakh rupees in your demat account. Other things to keep in mind is number of shares. Okay, so I'm gonna take out all the information from Google and show you exactly how this works, but just go follow me while I take you through this process. So things to remember is the total number of shares the company has, the retail shareholding below 2 lakh rupees in the company shareholding pattern, size of the buyback, price at which the company will buy back the shares, price of buyback, and the record date. Okay, and let me give you a very recent example of Wipro. Now this buyback it's already over. That means the record date means the date after which if you have the shares before this date, then you are eligible for the buyback. If you are having shares, if you buy the shares after this date, then you are not eligible for the buyback. Again, I will explain this to you again in an example so you understand this better. Okay, let me give an example of Wipro, and let me take out the news from Google, so it's very clear as to what is happening. Okay, so first things first, before I explain the Wipro buyback, let me show you with respect to the SEBI buyback, the SEBI buyback rule for retail investors, right? Again, I'm gonna do it again. SEBI buyback rule for retail investors. Right, so if you can see, SEBI makes reservation for retail investors in buyback offers. This is what I was talking about, right? And this has been happening since March 2012, so it's not something very recent. Now, if you were to go through this article, right, it says 15% of the offer for retail investors with holding up to 2 lakh rupees. There you go, right? You can Google this and you can find this out. Okay, so now let's take the example of Wipro and Wipro buyback. Okay, so there you go. It recently in July of 2017, it announced a buyback of 11,000 crores. So this is the news story, and let's see how this works. Right, it's announced a buyback of 11,000 crores. So let's open up the Excel and let's say the buyback side. So this is the name of the company is Wipro, right? So let's see. So first thing is the buyback size. This is 11,000 crores, right? The other thing I told you to remember is number of shares the company has. This again can easily be found out. Okay, so if I read this news, right, I will get more information as to the buyback price will be 320 rupees. So let's put that in as well, because that is the other piece of information we need. Price of buying is 320, right? 15% is reserved. So let's see, this is 15%. So it will be 11,000 into 15%. This is the amount reserved for retail shareholders who have shares below 2 lakh rupees, right? Let's see, let's read the news story again. So okay, it does not say anything about the record date, so I'm going to go back again, and if you see the first news, it tells me that the record date was 15th of September. Now this record date has already passed, but in future there will be more buybacks, so you can use this, right? Okay, so it says the record date is 15th of September right here. So I'm going to put that in as well. I mean 15th of September. Just bear with me for a moment. And now I'm going to find out the total number of shares the company has, right? Sorry, this should be the total number of shares the company has, right? So this is a bit tricky piece of information, but I'm gonna, so if you go to money control, and I'm gonna go for Wipro. Sorry, my internet is slightly slow today, but you get the idea. Okay, in this what you want to look at is you want to look at the shareholding pattern. Okay, in this shareholding pattern, if you go through it, you will get the total number of shares that are there, with the total number of shares right at the bottom. Right, this is the total number of shares right here, or you can use it, any of them. There you go. Which is how much is that? 16,000, 10 lakhs, 41, 241, 24 crores, 241 crore shares is what the company has. So I'm gonna use that as well. There you go. So 241 crore shares, right? Now you also want to see number of shares with retail investors. Right. Now this piece of information, where you will not find it on you will not find it on Money Control, so you will have to go to NSE India, which is National Stock Exchange website. Again, I'm telling you each and every step how to go about this, and then we will calculate how much profit you can make out of this. So let's search for Wipro. Right, so we are on the NSE Wipro page, and in this you want to go with company information, right, and then you want to click on shareholding patterns, right, and then you want to click on view details. Right. So when you see view details, you will get a list of options, but just choose the first option, which is the latest date. It gives me the shareholding pattern for 30th of June 2017, and I click on it. It opens another window, and I want to go to table 1. Table 1 gives you information about non-promoter, promoter shareholders, shareholding pattern. Go to table 2. Okay, so table 2, so basically you're looking for number of shareholders, number of shares with people who have holdings of below 2 lakhs, because that is what is reserved under SEBI rule. So go to table 3. Okay, this is what you want to see. Individual shareholders holding nominal share capital up to 2 lakh rupees, right? And in this you want to see the total number of shares, which is this, right? And let's take that number, and number of shares is this, right? This is the total number of shares which are there, which is roughly around 19 lakhs. So 10 crores 19 lakhs, so 10.19. okay, So 10 crores, okay, so it's 10.19 crores, right? So now here's the piece of data which we are working with. It's basically we have 1650 crores and the company is gonna buy back shares at 320, right? Because just take these, this is the piece of information which is most important, right? This one and 10.91. Okay, let me right. So if you have 1650 crores, right, and you're gonna buy back 300 at 320 rupees, how many shares can you buy back? So it comes to 1620 crores, right, divided by, so I'll have to change this into crores. So that's 100 that's 10, 100,000, 10,000, 1 lakh, 10 lakh, 1 crore, right? And then you're gonna divide this by 320, right? That's roughly 5.15 crores. So 5.15 crores is the number of shares that is for sure the company is gonna buy back from the retail shareholders. So that is 10 crore, so it's just 5.15. So 50% of the shares. So what you want to do is 15th September of 2017. Let's see what the price of Wipro was. On, let's say, 10th September. Sorry, my internet is a little slow today, so just bear with me. But this is a little complicated, but just keep repeating the steps again and again, and I'm sure within an hour or so you'll get the hang of it. So let's see what the price was on the 10th of September. So 12th, 8th, so it was close to around 300, yeah. So it was 300, if you can see that, it was 300 rupees, and let's put that in. So price on 10th, so 11th September, so 300. Right now you're gonna be sure that the company is gonna buy back at 320. So if you bought shares worth 2 lakh rupees, right, say buy shares on 10th for 2 lakhs, the company buys back at at 300 rupees. So you would buy back, and you would, right, and the company buys back 50% of the share at 320, which is so 20 divided by 300 into 100, which is around 6.66%. And then, so if you sold half the shares, say around shares worth 1 lakh, for 106 at a 6% profit, so 106, 1,06,000, and the rest of the shares you sold out again in open market, say for around 300. That means you would make a profit of 6,000 rupees, which is around say it's around 2%. So if you do it every month, then it gives you 24% of profit for the whole year, and this is absolutely risk free. Now, if you are confused at any of the steps which I mentioned, please leave a comment below and I'll do my best to explain it. In the case of Wipro, the profit is not that much, but in the case of TCS, the buyback percentage was 100%. In the case of Infosys, it will be a lot more. So make sure you hold on to these shares before, or you buy it before the record date. So for example, Infosys has announced a buyback at 1100 rupees, close to 1100 rupees, and the share price right now is 900 rupees, but the record date is not announced. As soon as the record date is announced, the shares will move up. So that is something to think about. I know this was a little confusing, but again, go through the steps or ask me questions on equityline.com, and that should be it. Thanks a lot, and keep in touch. Thanks. Bye.